Hello and welcome to my daily report market analysis videos with me, Richard Perry, market analyst at Hantec on Tuesday the 24th of March. Well, there has certainly been a recovery that is developing on markets. We've had this significant amount of easing that's promised by the Federal Reserve. They basically an open-ended commitment to expand its balance sheet to whatever means necessary, and markets have subsequently taken that on board and really run away with it actually today. We have seen previously where the markets had been significantly higher through this period, but it's interesting that we've not really seen any follow through in that. Now the question would be, can the S&P finally, or I mean this is depicting I suppose equities, but generally, can equities finally start to really significantly push on in a recovery scenario? We've got S&P futures 5% up, limit up in the US today. Look at the Nikkei, 7% higher overnight. We've got the European markets sort of 4 to 6% higher. All positive, and it seems to be that this is really driving the recovery across asset classes, really, because we saw gold that was significantly lower as the margin call related selling pressure hit in the recent couple of weeks. That turnaround in gold is really starting to take off now. Silver is another one. I'll talk about that in my chart of the day. Generally speaking, the dollar has been a key outperformer throughout this period, as the pretty much everything else has been sold apart from the dollar. Now that is starting to reverse, dollar falling away on an intraday basis there today. Look at the major currencies, euro, sterling, all positive. Aussie and Kiwi, the big outperformers of the day. So it's all looking fairly positive again, and or I say again, all looking fairly positive for now. The question would be, can these markets start to put together a string of positive sessions and continue to in the move in a recovery scenario? Now the question is, how are the markets, economies of the world responding to coronavirus? Well, at the moment you can see that the flash PMIs for the Eurozone, I'll just show you Germany under pressure there. Look at that, 37 on the composite. We've got the Eurozone composite 31, wow, on the composite PMI on the flash data, 35 on the composite, 37 for the composite on the UK. So all these economies getting absolutely smashed by coronavirus, but essentially the markets know that and they're anticipating that. It's just whether the monetary policy decisions and also the fiscal side can be backed up, backing up each other and coming in unison. We need to see the US Congress now coming out with a substantial fiscal support package, and I think that will be another moment for the leg higher once it happens, if it does come through. But we are still waiting for that. But the Federal Reserve seemingly writing a blank check for markets now. And so hence risk positive. So in terms of data points, further data points today, well, we've still got the US flash PMIs to look out for this afternoon. 145, got those flash PMIs. It's expected to see, again, off a cliff. But given the fact that you're in the 30s for the European numbers, well, are you going to see that in the US? That'll be the question. New home sales for the States, 0.75 million or 750,000 million, so slightly down from last month, 2% drop. And the Richmond composite, Richmond Fed composite, expected to be minus 10, but we have seen some rather significant downside surprises in the recent regional Fed surveys, so again, that could be a pretty negative number today. Right, so looking at my chart of the day, which is silver, what we've seen is, let me just show you the daily chart first, is silver, as I said, gold is starting to engage a significant recovery, but as is silver, and what you often see is silver is basically gold on steroids, and we've got silver hugely high today, 6% now. Gold is gold is about 3% higher, silver 6% higher, so this recovery that we're seeing in silver is massive. Given the context of hitting 1162 at the end or the middle of last week, we are significantly higher. I mean, that's, dare I say it, bull market territory on silver, up 20% from the lows. Remarkable. But yeah, so we've got that, and we've got the momentum indicators pulling positive configuration. You've got the RSI back above 30, that's a bull cross. You've got the stochastics also bull crossing. On the hourly chart, you've seen a base pattern. I talked about that in the morning in the daily commentary. The breakout above 1325 completed this base pattern. It got tested as a neckline support and went again. You've got the momentum indicators all positively configured now. MACD above neutral, RSI above 40 to 45. So positive looking developments through this silver chart. So it looks as though the recovery is now developing. So holding above 1325 is certainly a positive, I think, for silver. You've got the prospect of where you'd measure the bottom, which is 1160 to 1325, so around about 160 pips or so, 160 ticks of recovery. So you'd be looking at 15 big figure area there or thereabouts as a ballpark target. And to be honest, you haven't got a great deal of resistance considering the huge sell-off that you got, and that's around about 50% fib retracement. So there or thereabouts, I think a 50% fib retracement could easily be where we see this run coming to. So yeah, the bull rebound is on at the moment and it's looking fairly positive. So we are set up for this recovery in commodities, and silver is certainly gaining ground on the back of that. So with that in mind, I wish you good luck in your trading today. Click here to subscribe to our analysis videos and go to our website to sign up for our webinar.